Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thank you for checking out the Market Chameleon pre-market show with the main man, all the way from sunny Jersey Shore, Dimitri Pakamonic. How you doing, D?
Hey, Will, how are you?
Good, good. The disclaimer's up, I think, for everyone to see. But before we get to that, just a heads up for everyone. Tomorrow, I have a family situation in the morning, so we're not going to be able to do the pre-market show. I just wanted to give everyone a heads up, and I will try to remind everyone at the end. So I apologize about that. So we will be on next Thursday, but not tomorrow, Wednesday.
Yep.
All right, Demon, do you want to go with the disclaimer?
Yep. Before we get started, everyone, keep in mind, Market Chameleon is not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance.
Excellent.
I'm going to share my screen real quick. And before we get started, we do take questions. And if you guys joining us for the first time and have a question, you can put it in the live chat on YouTube. Will's watching it. He'll read them back to me. And if you want to come on a show and ask a question live, we also put out a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get to Zoom, you could click raise your hand. You don't have to turn on your video camera, but then you could ask your question directly. While we're waiting for any questions to queue up, I'm going to start out looking at the pre-market report, see what's trading in pre-market hours. And then I'm going to move on to Coinbase. At the end of the day yesterday, we had someone request to take a look at Coinbase, look at its potential valuation. So I'm going to start out probably doing that. If any questions come in, we'll stop me, let me know. We'll take the questions.
Perfect.
Okay. So this is the pre-market report. And these are stocks that are trading in the pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. I see 102 stocks made our percentage gainers list, 27 on the percentage decliners list. So right now we're looking like we're setting up for a more bullish bias at the open. I'm going to filter this list to just S&P 500 stocks to see what's going on there. If we see a similar situation, to do that, I'm going to use this filter in ETF, drop it down. Here I get a list of ETFs that I could select. By selecting one, this list will get filtered by the holdings in that ETF. So using SPY, which is the S&P 500 ETF, we filtered out this report and we see 32 stocks made our percentage gainers list, 3 on the decliners. So from here, same situation. We're looking like a more bullish bias at the open in the S&P 500. If there are no questions on this, Will, I'm going to move on. But before I do to Coinbase, I do want to say we did make an upgrade to the ETFs. So we are working in the background on ETFs and ETF analysis. And I think at this point, we added ETF holdings for any ETFs that have listed security, US listed securities. So, we don't have maybe the foreign ETFs, the foreign stocks, because they're harder to get the prices and what they are. But if you're looking at, let's say in ETF, here's ARKK. If you come here, ETF info, click on holdings, you could see which stocks this ETF holds, right? So these are the stocks that are part of this ETF, the weighting of each stock, and this gives you a idea, or really you will know, which stocks are in that ETF. Okay, and you can take a look at the performance and so forth. So we did add that, and I think we got, before I think we had a decent amount, like all the major ones, but we did expand it. So now there are a lot more holdings in here. A couple other things that we are adding with the ETFs, but I'll explain to you as we go along because they're still in the test phase. But inflows, outflows in the ETFs, and also on a stock level. So I think maybe starting Monday, I'll start showing those. Sound good, Will?
Very good. Thanks, Steve.
Okay. Let's go to Coinbase. And someone asked to take a look at the valuation of Coinbase, and we do have a simple model as a starting point for stocks. Now, this is kind of like a, maybe a standard calculator model as starting points as quick reference. Then you could move on. So Coinbase doesn't have a lot of data. It's not been out there for many years, right? It's relatively new. So we don't have lots of data. We don't have, a good, amount of years of data that we can kind of look back to analyze. So our model right now, our standard calculator, will not calculate anything based on that, right? So it does have minimum requirement. But what I wanted to show using Coinbase is how do you do a deeper analysis, right? So even if you have a standard calculator, it's not really enough. And as you build the model, it starts simple, but then you start adding more and more factors into that pricing model to see, is this a good deal? Should I be buying Coinbase or not buying Coinbase? And I'll start kind of showing you guys how I would, start this out, right? So that will be like today's practice. Well, how would I start this out? Building a model, seeing like, is this a good valuation or not? All right. And the first thing, what I would do is open up, their reports, open up what Coinbase is saying, and really learn what am I getting into? Like, what is this? What is the business I'm investing in? And how do I track it? How do I create estimates? And then we'll talk about Coinbase's execution. So here, you could go to the investor's website, investor relations website, SEC filings. I kind of opened it up. I started doing it this morning, just making myself some notes. But here's the latest quarter. They give a letter to the shareholders, all right? And they talk about it. And you have to go through it and read it and start making notes for yourself if you want to build that model. They'll give you some key metrics that they're looking at, but I'm not going to go through all of it. I'm just going to kind of pluck out what I think is important, and you guys could go read it themselves. So here in this letter, this is what, and I highlighted here, that our total trading volume declined in line with total crypto spot market volumes. Okay. So that one I plucked out because that's important to me, and I'll show you why, because their trading volume is a big part of their revenue. And when they say it's in line with total crypto spot market volume, now I have information that I could track in real time to start making estimates what I think their revenues might be going forward, right? Or this quarter, because I could get that data and track daily total crypto volume, right? Or volume even down to the Bitcoin, Ethereum, whatever, and I could track that every day. So pluck that out information. That's important. I put that aside. I'm going to come down here, and I'm going to just kind of I'm going to skip through, go to the tables over here. You guys could read through it, but I'm just plucking out the important information, and I see their trading volume over here. And you could see here, they give you a breakdown, retail and institutional. And they tell you quarter by quarter how much volume was on their exchange total, right? And this is where they're generating fees, as you'll see in their report. So now I have even more information, because I could go back in time and see the volume, what the volume was in crypto on this quarter, this quarter, this quarter, and this quarter, and see if their volume correlates, how it correlates to the actual volume, right? So here, if from first quarter to second quarter, their trading volume increased by, let's say, 30%, and all the volume in crypto increased by 30%. So I could say it's a 1-to-1, right, correlation, right? If it went from here to here, decreased 30%, and the total volume decreased 30%, then it's a 1-to-1 correlation. I'd have to figure that out, but now I'm starting to build out my model. What else they're doing is giving me a breakdown. I could see here Bitcoin, Ethereum, and all the rest. So I could see about 50% of their volume is in Bitcoin and Ethereum, approximately, right? So that's where, I have to start tracking the volume to start estimating what do I think is happening in Coinbase in between, and then I could start estimating what I think their earnings are doing. Okay, so are people seeing it? So here, I'm going to show you guys really quickly. If you go to Coinbase, go to the SEC filings, and I'm going to just kind of jump around here a little bit, and you go to their annual report. They're going to tell you in that annual report really the risk factors, right? So we're going to go down here to the risk factors. We're going to start plucking it out. And let me show you here. See, risk factors, our total volume, our total revenue. So this is their total revenue is substantially dependent on the prices of crypto assets and volume of transactions conducted on our platform. If such price or volume declines, our business operating results and financial conditions would be adversely affected. So, I did this research. I'm not going to go through this whole report, but you could see here that when you're investing in Coinbase, you start to realize really what I'm investing is the increase in trading volume in crypto assets. That's how they make their money, on the volume. They make fees on transactions. So we have to be able to track that and be able also to create models to see if we could forecast future growth in trading volume. All right, so let me know if you have any questions, but these are important things. Majority of our net revenue is from transactions in Bitcoin and Ethereum. So now they're telling us there are two crypto assets that are responsible for the majority of their net revenue, right? So now we're plucking out all the important factors that we need in our model to run estimates, what we think the future growth is, and how will Coinbase benefit from it. All right. So let's come back here. And I'm starting just to go down here. These are the things that they're telling us about. And here's my Excel. I just started doing this in the morning, but here revenue is coming from their crypto transactions. Then I go look at competition. And they gave us an indication of, who they think they compete with. And they told us Square, Robinhood, and PayPal. That also came from their annual. And they did tell us that Square, Robinhood, and PayPal, that's only a part of their business. So I'd have to go in there, look at Square, Robinhood, PayPal, if they give us metrics from how they're executing on their crypto transactions. Because then what I could do is compare that to Coinbase to see how Coinbase is executing versus their competitors. So I would have to go into Robinhood, and I think that they do give you a breakdown of options, stocks, crypto. We'd have to see, are there transactions in crypto growing at the same pace, worse or better than Coinbase, and how are their margins in it, right? But I'm going to skip this part right now just to keep going. Then I looked at the different segments that they generate revenue from. So let's just come back to here. I'm going to come down here. Just going to go to the tables. The tables are easier. This is the assets on their platform. So you could see here, assets, they grew, but not significantly from last year to here. I think partially that's also due because those things went down, right? Cryptos are way down than they were before. So here are the revenues. And here is the interesting part. So I see most of their revenue, right? Here's the total revenue, net sales, is coming from just transactions. I mean, mostly it's coming from retail. So the bulk of the money they make is coming from retail traders trading crypto. And when they trade the crypto, they pay fees. All right. So that's really what that's mostly what you're investing in when you buy Coinbase, that there's going to be lots of retail investors trading in this space, right? Primarily right now, it's Ethereum and Bitcoin. But this is all right here in front of me, and then I could start tracking this in my model, right? I could track day to day the volume in these assets and the value of those assets, if they're going up or down. Then they give you, a breakdown. Here's institutional. You could read about this, blockchain reports. They have custodial business there, but you could see these are not as significant right now. They're not as significant as this over here. This is where the majority of their revenue is coming from.
So, I mean, basically, they're giving the institutional traders a significant discount for trading their volume, because it seemed like the volume was bigger from the institutional side. Or am I wrong?
No, well, according to this is shown how much revenue they're generating from retail, how much from institutions, right? And most of their revenue is coming from retail traders.
I'm just wondering how that works, because I thought earlier, and I could be mistaken, that it showed that a lot of the volume is from institutional. Am I wrong?
I didn't see that.
Maybe I'm wrong.
No, I mean the assets.
Yeah, maybe it was the assets. Yeah,
right. So, but remember, they're not generating from the assets like a traditional brokerage firm. They're doing it from transactions. So the institutions might just be
one transaction,
one big transaction, and they're holding the asset, right?
Yeah.
So they're generating fees from the buying and selling.
Each trade. So
yeah. They need to be doing trades. And even though the retail en masse holds less, assets, they're probably doing a lot more trade, right? And there's a lot more retail traders, on their platform. I think they have we could take a look at something like over 5 million retail traders on there. But yeah, if you're looking at just assets held right now, institutions hold more assets than retails on hold.
Gotcha.
And so I'm gonna just see, but what I could look at from quarter to quarter, and I was just eyeballing it, that all these revenues seem to be moving up and down in sync, right? The only one I think that was kind of a little bit more stable, where maybe these, interest income. This is kind of growing custodial fees. So these might be interesting, but they're still a very, very small part of the whole picture, right? So this is really the big one, our transaction. Are people trading more, specifically retail customers? That's what you're really investing in at this point. And we could see here, there's a significant drop in revenue from the fourth quarter to the first quarter, about 50%, maybe more than 50%. So that's telling us that, much less volume than before. Probably peaked out and went down. So we need to be able, we're going to create something where we're going to see what does this volume kind of look like since the last quarter. Is it going lower and high or higher? And what do we think about it going further out into the future? So now we pluck that out. The other thing we're going to go and talk about is, the revenue. What about their costs? And these are all important. I'm going to kind of skip through this. You guys could go read this yourself. But here's the other part of it, is their operating expenses. This is important here. So what we see is, yes, their volume dropped, right? But how are they executing, during down markets and up markets? And here we see that their transaction expenses, were kind of moving up and down with the volume, right? So as a percentage of net revenue, though, it is climbing. So the last earnings, this is their variable cost that I'm looking at, that 24% of the revenue that they generated, went to transaction expenses, means that they kept, 76% profit margin, which is really good, right? So if you do $100 billion in revenue, it costs you $240 million. You keep the rest. So that part seems good on execution. I think that's great. So that looks like a really good business model. But they did lose money. So let's see why that happened, right? Why did they lose so much money with these high margins? And that's important to understand. So look at their sales and marketing. It did, it started to climb here and then decline. So that's kind of moving up. I mean, that it's a bigger part for sure, but it is moving up and down kind of with the revenue. Then look at their technology and development expenses going up, 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 and up, right? So that here, we have to understand why is it keep increasing so much. And then general and administrative, look up, up, a little bit down, up and up, and then other operating expenses. So this here brought their total operating expenses to 1.7 billion, right? So that's where they lost money, right? What was their revenue? Total revenue, 1.16 billion, right? But total expenses, 1.7 billion. So you could see here, big, that's a big difference, right? Between what it costs you and what you made, whatever, $500 million, something like that. And down here, they give us a clue. So look at their full-time employees. They went on a hiring spree. They have 1,700 employees last year, same quarter last year. Look, all of a sudden ramped up 2,100, 2,781, 3,700, 4,948. So to me, right now, what it's starting to look like, and this is a case you see a lot where you've seen so much success for so many years, you start getting so bullish, right? That you're over enthusiastic and you just start going on. So when I see that, that starts to be concerning, because what are you going to do with all those employees? You just more than doubled your workforce in a year, right? And employees, they're not as easy, to, you could lay them off, you could fire them, but it's not as easy as just getting rid of a bad asset, right? I hold Bitcoin, is going down, let me just get rid of it, I'm out. It's not as easy with employees, especially you've already made investments in them. It's not good for your reputation. People are not going to want to come and work for you if they were going to be doing that. So here, this is right now an issue, right? And that has to go into my model, because now I have to figure out what is going to be my fixed cost going forward, and how much volume do they need to go back to break even, right? So that's what we have to figure out, is like, how far away are we from break even? Because this might not be going down for a while, unless we track, unless Coinbase just says we're going to lay off, a lot of people. But if they're not, then this is going to remain a fixed cost. They're going to have to continue paying this, right? No matter what their revenue is, they got to keep paying this, and that's going to come out of the bank. That's going to come out of their cash, right? That's going to come out of the shareholder equity. All right.
They already said they were going to start laying off employees, right?
I think that they said that they're not going to. They're
going to stop hiring and maybe cut back or
come back. Yeah. So we have to come back there. Yeah. Take a look, read it, and see how much of this workforce are they. I don't think it's going back to here, right? But I think they got spooked themselves, because when you look at these numbers, anybody looking at these numbers right now, to me, it's like over enthusiasm, right? Because how do you put so many people to work and train them? And they more than doubled in a very short period of time, going from 1,700 to 4,900. Now you got, where do you place them? And you have to figure out, how do you make them productive, right? Like, what are they? It could be years before they become.
Yeah, well, they did a big NFT build that cost hundreds of millions of dollars to try to compete in and again, we are now in the midst of a bear market, not only in stocks, but in the entire crypto space, NFTs, cryptocurrencies. So their revenue's going to drop significantly. And it's like, how do you manage your drop in revenue with employees you've hired to build systems that are no longer driving revenue, right? And you need you need a certain number of those employees to keep what you've built around. Right. So it's a big,
because on a surface, they have a good model, right? Like, you could see the high margins, if volumes stay, how many of these employees do you need to sustain that, right? And to grow. Right now, I think that here's the issue right now. That's that until there's a better balance between their fixed, because that's a fixed cost will that either those employees will become productive and you'll see extra revenue, or the transaction volume has to go up. And here they tell us, look, transactions expenses were 278 million, decrease of 45% compared to fourth quarter. The primary source of the decline was lower trading volume. So it's always trading volume, right? Trading volume. That's where it's all coming from. I'm going to show you another thing really quickly before, I'll continue this, but they also talk about their cash. And here they ended first quarter with $6.1 billion in cash and equivalents, including $3.4 billion in proceeds from long-term debt. So from $6.1 billion, some of it is coming from issuing debt, right? So it wasn't coming from just retained earnings. They do have debt. This was down 7.1 billion. And here they give a breakdown. As of the end of the first quarter, we had approximately $180 million in USD. And the fair market value of our crypto assets held as investments was approximately 1 billion. So out of this 6.1 billion, remember they borrowed 3.4, they invested $1 billion into crypto assets. So we have to go back end of first quarter, see how much the crypto assets declined, because that $1 billion right now could be, and I'm not sure, would have to go look. It could be 700, it could be worth 700 million, it could be worth 500 million, right? But since the first quarter, since April, all we've been seeing is new lows. So this here is lower. Maybe this is the same USDC 180 million, but this is showing you how aggressive they were and bullish on they borrowed money, to increase their cash and equivalents, but they took $1 billion out of there and put it into crypto. So that's declined too. So that would go into our model because now the equity is lower, right? Whatever the equity was first quarter, if the value of those crypto assets is lower, their equity is lower. Not only that, my guess is that the volumes are lower. So there's probably coming up another maybe $400 million loss just in expenses. So you might be looking at, and I'm doing a rough estimate, probably another $400 million in loss, this next quarter could look very similar, right? That the volumes might be the same, expenses the same. So we're looking at another $400 or $500 million loss. That's coming out from shareholders' equity. And about $1 billion. Huh?
We can talk about it more tomorrow. We've gone through the opening, but it is interesting to think about because if you believe in crypto as a long-term investment vehicle and use case scenario, this could be the last player left in the marketplace when this all shakes out, right? I mean, it looks like they have a reasonably, as long as they manage employees correctly, it looks like they have a reasonable long runway, even with the cash on hand.
Right. So at 6 billion, you got a long runway. You could burn, I guess you could burn like 400 or 500 million for 10, 12 quarters. But $1 billion of it is invested into crypto. So that could be, cut in half. Unless
it already has been, probably, right?
Yeah, that could have been cut in half because that's part of their cash and equivalents, right? You'd have to go down there and see the breakdown.
Well, let's keep looking at it tomorrow. We're 3 minutes into the opening. Awesome job, Dima. This is great information.
Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Actually, it won't be tomorrow. It'll be Thursday. We'll see everyone on Thursday. We'll continue with the look at Coinbase. Awesome job. Thanks everyone for joining. Great job, D. Have a good trading day. Bye.
Thanks, everyone. Bye.